TGIF face. Everyone make it to the end of the week okay? Hiya Zig. I see you like that expression, only God can move my stops. All right, buddy. All right, so NFP, I'm actually thinking that I wouldn't mind a strong report to fade dollar strength, and in particular, the euro. So talked about buying it yesterday around 12.10, and here we are captured again and rejected from this moving average. Never got back inside the line. But this is an even better example of compressed Bollinger Bands than it was yesterday. So right now we have it on the outside of the Bollinger Bands. And remember what I learned from Bollinger is that the first move breakout out of compressed bands, this is really a pretty classic example, is the fake out, and you look for the next move above the compressed band and go with it. So that would mean a candle closing back over 1235 right here on the hourly, which will adjust with time. Something that could be significant, and perhaps the crude holds one more time to attempt another rally. I mean, this was a confirmed high, but if we close back inside the wedge line and negate the throw over, I think you could seal it for the correction beginning in WTI. You lost your account. Yeah. Okay. All right. So keep an eye on this. It looks like it's 55,155. And then Amanda, are you here? Because you were talking about a 3 drive. I think it was, well, it's a 4-hour chart, so it was here. And I said sometimes the third will have 3. So, you know, this could have been 1 of 3, 2 of 3, and maybe 3 of 3. Okay, Amanda, so that's what I'm talking about. It's not the perfect example, or it could already be done at 1, 2, 3. We didn't blow out the divergence, but that's a 4-hour. So when you're looking at 3 drives, and I've noticed it a lot on the last drive, you'll actually have a 3 within it. Okay, so we'll see what happens with the yen. Of course, any yen shorts, you know, we retrace 88.6, and I was trying it here at 78.6, still there, risking the highs. Okay, so we'll see what happens there with US dollar yen. Get a strong number, maybe I'll get blown out, or maybe it'll be a fade. But looking to fade dollar weakness. What I've noticed that's different, and I know because I've been wrong and underwater on bearish ETFs and NASDAQ, but if you notice here, maybe it shows up better on the daily. Okay, now the 4-hour. All right, so the S&Ps are pushing new highs here. And I think we failed between here, maybe 288, 290. But you see how the S&Ps are pushing new highs? I'm not saying the NASDAQ won't, but it's not leading. That's the main difference. NASDAQ way outperformed the rest of the market, excuse me, from here. It was like a comet, way outperformed S&Ps, way outperformed the Dow, and the Dow has been playing catch up with it being the leader. So the generals are out there leading the troops, and Russell still hasn't made a new high, so we'll see if the troops continue to follow the generals. And with that being said, you could throw your charts out for a few minutes in 26, but keep them up. Because I think the key is to react to the reaction rather than trying to predict it. I'm not saying I'm not taking anything into the report, but it's light in comparison so that I'm prepped if I see areas I want to trade against, after the number, reacting to the reaction instead of playing roulette with a black or red bet on the NFP. So I know Blake will know. What are the expectations for today, buddy? Good morning.
Good morning, Dale. So expectations are for 177,000 jobs and to be created, and which is, I mean, we're still running pretty high employment numbers, despite everybody believing that we're, at full employment, and that's a big number, but I think the risk is that we still continue to beat, and our unemployment rate's at 3.8%. I mean, that's a very low number, and so
I heard, Blake, that the bullish part of this report would be, last month was lousy. Revision up from last month will make people feel even more confident that that was aberrational. Because we had a weak one, didn't we, last month?
We did. Yeah. Let's here. Let me go ahead.
So people are going to be paying attention to see if there are revisions to last month's numbers.
Yeah. So if you look at but where are we? Here we are. So last month was a big miss, and so this month should be revised back up. That's what the conventional wisdom would tell you. Or we have an outsized number to the upside today and a lower and no real revisions. But what I wanted to say regarding non-farm payroll is, I was chatting with the guys in the office here over the last 30 minutes, and they're like, we don't know what to do on a good or bad number, because there's so much gamma, or there's so many options being played right now around these numbers, the current prices, I should say, that any number that's close to inline or not too outsized is not going to get a big reaction. So we have to see a really, really big number, or in my, I would say, best case scenario, a really weak number. I'd hope for a strong number, and I'll tell you the reasons why here in a second. But if we get a real weak number, and you don't get any huge revision, you could see dollar selling come in mass. Yeah. All right, so I personally, let me go to the dollar yen. I personally want to see a strong number, and the reason why is because I'd love to see yields just cream higher and the dollar yen start squeezing. Like a number in the 220 to 230 range, and see a decent revision higher from last month. That would be what I'd optimally. Is that the right word? Is that a correct word? Optimally. Forget it. You know what I'm trying to say. I'd love to see a good number. I'd love to see a good number. However, a bad number, that, let's say we have another bad number and the revisions just aren't so great. The dollar yen could, come slumping through, some of the support through here. Let me give that a different color, just so a little bit more visible here. But that's, for me, that's what I'm hoping for. But realistically, I mean, let's try to be realistic here. There's a lot of options going off around these current levels. We are in a very low volatility environment. We're probably going to get a number that's not too shocking. 150,000, 190,000, market's we're looking for 177 via Bloomberg. So Bloomberg is, you can see it right here. We are looking for 177,000 jobs. So again, I'm not thoroughly excited about today, which I'm just trading a cross rate right now. I've been scalping around a little bit. Last night I bought a little dollar yen as it moved higher. Once that China news came out, um, Z said that they're looking forward to we're getting close on a trade deal, and the dollar yen spiked up. Traded that a little bit through the 70s and scalped it for a little bit, but it really hasn't moved anywhere. And I bought some Aussies, on that spike up here. But we were really just range bound, and I don't think that anything that we get today is really going to move the needle. That's the problem. And let's talk about a couple other things. All right. Just in case. And by the way, I didn't get to say good morning, TGIF. I'm happy that it's Friday. That's for sure. So let's start with the euro. All right. So the euro, range bound, obviously. Now we can probably tighten up our thought process here as far as a range goes. So that looks pretty doable right now, right? So let's actually get rid of this fib so we can, kind of see what we're dealing with. So, I'd mentioned when we were up here earlier this week, on Wednesday, I said, hey, if it gets down to 112.20, it'd be a, good place to pick up the euro, and let me draw this out here. Let me see the pen. I can use that pen. So, I was thinking, hey, we have the potential of an inverted head and shoulder pattern, which frankly we do. I mean, week number, euro could, start to make its way higher towards this, 112.80 level. I think that's doable. And frankly, I wouldn't mind doing that either. A pretty weak number. I gave you the scenarios. Weak number, not a big revision. Let's say we create only 100,000 jobs. There's no huge revision higher from last month. People will go, wow, all right, the employment picture is starting to really sour in the U.S. Time to go long or short some dollars. So you might get a little move on the euro. I'll say I'm not a big euro bull right now. Europe is in a you could argue is in a recessionary type of period. You could argue that Germany is in a recession. So buying the euro and trying to hang on for a euro 120 move is not what I would be looking to do. Not saying that it can't happen. I'm just saying that that's not what I'm looking for at this, very moment in time on Friday morning at 5:13 a.m. on the 5th of April. It's not, I'm not looking for a 120 move in the euro, but could it play higher, today and going into next week? Sure. We could see some sort of move like that. Flip side to that is, we get a strong number and we print something in the 220, 230 range, and you can see a strong revision. We could see the euro back down at below 112. So I'll play it either way. Don't care. I just hope that at this stage in time, what I hope is just a good outsized number. That's all I really care about. Now, let's say we have
Love that formation, Blake. That was really nice.
Thank you. Just hope we get something. That's all I hope for. It's not. What am I looking for today? It's not going to be 100 pip move. I'll be lucky to squeeze 20 50 pips out of this market today.
Okay.
Yeah. I mean, that's let's be realistic about all the options that are expiring around current prices. It's just the market's trapped right now.
Where's the biggest open interest? 112.
112.50 right now.
Okay.
And you missed this probably as you stepped away. I was chatting with the guys in the office, and everybody's like, there's just so many options expiring, so much gamma around that it's just not, it's like trying to expect a big move today is
Yeah, the writers usually win, you know,
Yeah.
and then the move happens the day after expiration. You know how I know? Because I've had options expire on me, and then the next day they work.
Yeah. So
I don't trade them anymore. Options are like relationships. 90% of them expire worthless.
there you go. So let's take a look at the cable. The cable. This is one that if we have a strong number, and let's say we have a strong, reading on employment, and we see a big revision higher, I wouldn't mind actually shorting the cable. The Brexit outlook is starting to look pretty dim at this point, and it's we're faced with if we extend further into June, is that good for business or is it bad for business? I mean, business have to plan years in advance, and frankly, the more you prolong this, the more you force the hand of businesses to say, you know what, I just have to start doing things. I have to start planning with or without this, and I have to assume the worst case scenario. Then on top of it, it stretches out potentially the inevitable. On the other hand, the risks of a no Brexit deal or become a little bit more real if the leash is tightened a little bit. So I'm looking at the cable thinking, man, I don't know if I really want to be long. It's had a lot of time to try to rally, and frankly, we break through these lows, we break through this 130.50, and it can open up all the way down to 130 or 129.80. So just a strong number. I wouldn't mind playing this to the downside. The Aussie, with Z's comments last night, the Aussie failed to break out above that resistance. Let me grab a line here. It failed to break out above this resistance right here. And, based on what we got from Lighthouser, that, we're still far away on some of these big items on trade. And FX Macro, who, is Mr. Gelos at Gelos Capital, he made a good point. He's like, look, you got to listen to Lighthouser. You can't listen to Trump. Trump's just going to talk, just try to, he's the ultimate, he's ultimate salesman.
I saw someone tweet like that. He said, we'll have it done in a month. He said the exact same thing a month ago.
Well, yeah, I mean, it's just, he's obviously, he's all about, selling an idea and getting people hyped up. But the nuts and bolts of it all comes to our, Lighthouser, who's the major trade representative. So yeah, when he says there's still major issues that we have to tackle, you have to really, hone in on that information and say, we aren't as close as Trump wants us to believe. So therefore, the Aussie, no one's falling for the Aussie right now based on those comments. And, the longer we sit up here, the more the risk is for some downside pressure. Then you take a look at the Kiwi. I mean, the Kiwi's, below support now, and we're just hanging on by a thread. If you're long the Kiwi, you're probably pooping your pants right now, literally. Like, I'm not leaving my desk, and I will have to poop my pants at my desk because I, scared to be long. And frankly, we start cracking some of these levels, and we'll see, 66 cents pretty quickly. Strong numbers aren't going to help the Kiwi here. Strong data is going to push the Kiwi lower, in my opinion. The dollar Canadian squeezing a little bit through this range resistance. We could be, heading back to the 134.50, but keep in mind that we have Canadian data as well. So it's not just U.S. data. We have Canadian employment, and Canadian employment, frankly, has been pretty strong. I mean, look at the last 2 months and the beats, and then you can actually go last 4 months, big outsized numbers the last few months. So, if you think, okay, like the last 4 months, we've had pretty good numbers, really good numbers for 3 of those 4 months. If this number comes in a little weak, could that, and you match it with a strong U.S. Data, could we, be spiking back up here towards, 134.40? I think that is a risk right now for the dollar Canadian. I'm not trading the Canadian. I'm just, outlining the risks here. Dollar yen. Let's talk about the dollar yen, because I know I briefly mentioned it. This is a currency pair. I don't mind trading in either direction. However, I'd love to see a strong number, because I need to reset that chart. So as far as the dollar yen goes, it has been unbelievably well bid. It has held up extremely well. Yet, and I have to say that stocks have also held up well too. So that's a big reason. That's a big, tailwind for the dollar yen. But if we do find out that there is some sort of trade deal coming and yields continue to rally, this dollar yen is above the 200-day moving average. There is a risk that we could break up through these highs and go back to 114, 114.50, and then that's a lot of, there's a lot of open air. This is, there's a lot of space up here, right? This is
like Bitcoin had.
Yeah, like, you can squeeze the hell out of this market. And, I threw out the idea, I threw out the idea yesterday of, how about if we had a Brexit deal and a trade deal happen, right at the same time, like within hours or days of each other. If we had a Brexit deal, no Brexit, no hard Brexit, we get some sort of Brexit deal in the next couple of weeks where, everybody agrees to terms, and we have a China deal at the same time, this market bonds would crap, yields would rally, the stock market would hit all-time highs. It may only be may only last for a couple of days, but hell, give me the blow off top, give me some sort of volatility. That would be epically awesome. And but I think what could suggest that something like this would be, brewing, would be the dollar yen breaking above like this 112 level. And I'd love, and I'm going to fantasize with you guys right now. And, some of you guys fantasize about certain things. I fantasize about market moves. I would fantasize about a move up to like that to on a big blow off top and then just, just reverse. That would be epically awesome.
There are a lot of Elliott guys have 122 targets longer term in the end.
And maybe that's possible. Again, if you throw
look at a weekly, probably could. Yeah.
Well, you throw. There you go. There you go. Right. Yeah, you've got a little Gartley developed here, but you put in a China trade deal and a China trade deal and a Brexit deal all in the same package, and put it together.
That would do it.
That could do it. That could do it, and it would be a major blow off top. I mean, we could see, we could see this. We could see this. You know what I mean? And that would be epically awesome. I'd be like so excited to be here witnessing that. And you know what? I'm gonna leave you with one last thing before I turn it over to Steve. Okay. We deserve it. You and I, not just you, Dale. I'm talking about everybody at home. We deserve volatility. We have persevered. You and I, everybody at home, we have just sat here and dealt with the lowest period of volatility in years. You could argue decades, you can argue the last 5 years. We have dealt with this low volatility long enough, and we deserve massive volatility. So God, bring us a deal and Brexit all at the same time, a China-US trade deal, bring us some freaking volatility, and we're going to thrive. If you can survive this crap ass market, you will thrive when volatility hits. And that's why this is you know, I was
How
having
about this, Blake? God,
wait. I was having my end of quarter chat with you know, the principals at Gallows Capital a couple of, I think on Monday or Friday of last week, the end of quarter. And, you know, and I mentioned this to you guys, actually, I think last week, or I might have mentioned it at the beginning of this week. I'm like, you know, we were just like, yeah, you know, this low volatility, it stinks. And you know, FX Macro, which is, you know, Mr. Gallows, he's like, look, you know, our firm, you know, we're slightly positive, you know, which is good considering. He's like, you know, a lot of people are really floundering right now, and that's the hallmark of a survivor. If you can, you know, fare okay and tread water, and if you're making money, that's even better. But if you can just hang out and not lose money during these periods, when volatility comes, that's when we reap the rewards. So just remember that, guys. You're dealing with and persevering through some of the hardest markets at this time, and kudos for you for still standing. For those of you that are still standing, you may be standing on one leg and it may be a peg leg, but hey, you're still standing. So that's so you guys should all be, you know, happy for that. So with that being said, I'm going to pass over to Steve and Stelios and back over to you, Coach.
Okay,
Steve,
man.
are you here?
Have a good weekend.
Oh, yeah. I am here as well. Good morning.
Hey, good morning, guys. Steve, did you want to take the helm? Are you okay to do so?
Absolutely. I've been worse.
Okay.
It's okay.
Good deal. Well, here's the thing. I'm gonna mention that I'll keep my mic on through this. I just need to focus on a couple of things. So I'll yell out numbers as I hear them and I see them. Okay.
Absolutely. Perfect.
Cool, buddy. You know, your prayer might be answered today, Blake. You know, God always offers us peace. How about this? God, give us chaos.
There we go. There.
All right.
Perfect.
Okay.
Perfect.
All right.
I mean, the central bankers have proved that the idea of entropy is not, you know, what they subscribe to. Yeah.
Yeah, let Pandora out of the box and let's go to work.
Stelio, any news? We have two more minutes until.
Couple of things before the data. We had some numbers this morning. Household spending out of Japan, which was quite a bit worse than expected. The surprise was that we finally got some positive numbers out of Germany. Industrial production beat by a little bit, and the other thing that happened is that Prime Minister May officially asked for an extension until the 30th of June from the EU. And we're going to learn a new word today. Donald Tusk of the EU, he floated
I read that article.
Yeah, he floated the idea of giving a 1 year flex extension. Yes, so basically a 1 year extension, a flexible extension until they manage to pass some kind of a deal from Parliament. So, you know, it looks like, you know, May definitely wants a small extension. I think the Europeans will want a larger extension if that happens. Let's see how that progresses. But, you know, it seems that on both sides there is a willingness to, you know, fight a little bit more, try to find some kind of a way to solve this. So that was it. You know, Blake mentioned the statements from the US and from China as well that, you know, the trade deal is coming. We were going to price it probably 10 more times before it comes. But, you know, we had a little bit of risk on, and we seem to be
30 seconds, guys. 30 seconds.
Okay, we have average hourly earnings as well today. I know it's you know, payroll is the main number, but average hourly earnings is something that everybody looks at. So that's another.
I'm going to leave USD CAD here, and I'm going to put USD yen at the bottom right, so we can monitor what's happening. The S&P is in the top left. Euro USD in the middle. So we're ready. Let's see what we get.
196.
Revisions up 28,000.
That's what they like, but
yeah. Average hourly earnings is worse than expected, but the headline numbers payrolls is better.
Yeah, so numbers are quite better. 196 versus 175. Private non-farm payrolls 182 versus 170. Participation rate fell a little bit again, Stelio, from 63.2 to 63. In most cases, when we have a little rebound in participation, we go, it's proved to be temporary. Employment change negative for Canada, but less negative than expected, minus 7.2 versus minus 10 that was expected. Unemployment rate steady as it goes on for Canada, 5.8 versus 5.8, and the same for the US, 3.8 versus 3.8 expected. Average hourly earnings lower, as you mentioned, Stelio, 3.2 versus 3.4 that was expected year on year, and 0.1 versus 0.2 that was expected month on month. So in general,
these are not the numbers we wanted for some volatility, I'm afraid.
Yeah, actually, yes. USD CAD, as we see, is catching a bid now. You can see it here. It's at the highs of the day, hitting on 134 at the moment. Euro USD, spiked up like initially, and now it's more or less doing nothing once again. You can even see here a little inverted head and shoulders potential in Euro USD, but of course, in order for that to play out, we need to see a move above 112.50. What is responding positively, no surprise there, is the S&P.
What do you think about shorting it right here, Steve? We're making new highs with all kinds of non-confirmations. Adding in here. We almost got to your 28.90 level.
I added like 4 or 5 handles lower, so
okay. Okay.
Yeah. So personally, there's no point.
Yeah. Okay.
As I was mentioning yesterday, I wouldn't be surprised if what happens here is a little overthrow from this wedge and then a pullback, something like this. You know how the market is. I mean, sometimes it wants to.
That's what crude did. Crude did the same thing with the wedge line this week.
Yeah, so far yes, but crude. We as I've said, we need to respect. We need to respect the upside for crude as long as we don't have like a big reversal signal. And so far, if we go to crude, since you mentioned it, as you see the price action in crude.
You have the same line. Yours is dotted, but I'd say it could make a new high because RSI.
Yeah, but they also have this channel because you can see it here. So far, this pullback in crude
right to the
definitely.
Line.
Yeah, it's not only that. It has very corrective characteristics. I mean, this move lower for crude so far looks corrective. So I would really not be surprised if we get another spike higher towards 64 before seeing a move lower. Anyhow, my plan in crude, as I went over it yesterday, of course, I don't know if the market is going to, is going to do me the favor, but but my plan is to start building a position at 63.50, like sell 1/3 at 63.50 and another third at 64, and see what happens from there. 64 is going to be a critical level because 64 is previous support resistance area, quite important previous support resistance area, and as you see, depends on how fast we get there. There is a big chance that it will also confluence with these ascending channels resistance. Now, if we,
thank you,
absolutely. Now, if we have a look at it on the daily and the weekly, because it's quite important sometimes, looking at charts, on that area, on the higher time frames, as you see, 63.75 is the 61.8% fib of this whole move lower. So between 63.50 that I said and 64, 63.75 is also like a key area of resistance. And finally, if we have a look at it on the weekly, you will notice that no, we actually, let me redraw this properly from the low there to, let's redraw. Okay, you see this? You see this trend line? I mean, perfectly passes from there. If we take it through the lower wicks, we also have this weekly ascending trend line and the 50 simple moving average on the weekly chart, more or less there as well, roughly at 62. Sorry, at 63.60. So several areas of resistance, all of them within that $0.50, 63.50 to 64. That's why I like the idea of selling it. Also, as we saw yesterday, crude has already moved higher, like 50%. Year to date, which is amazing performance, probably one of the best performing years we've had in several years. So any way you slice it, I do think that we are due for some type of a pullback. I'm just hoping that this little move lower is going to be indeed corrective, because I want to see one more move to the upside so I can actually start gaining that exposure I was talking about. Now, since we started with commodities, let's have a look at the metals before we go to FX. As you see here on the daily, the price action for gold seems clearly, textbook consolidation. If we look at it on the 4-hour chart, you can even look at it like this, probably a triangle. I know we spiked lower like briefly, but whatever, bottom line, corrective price action. So I still believe that there is a high chance that we're going to resume lower. I still have my shorts, and silver, more or less the same deal. I do believe that we can see one more move to the downside at least, before something else happening. Earlier in the chat room, I actually posted that I took 1/3 off my palladium short, because we tagged the previous low. That was a very, very nice move, because now this second third I took it off for 5.83, if I remember, well, percentage points of a move, which happened like within 24 hours. You don't get so lucky that often, obviously, to get these kind of moves. I got lucky to get that selling opportunity yesterday, but the market really favored me in the way that palladium moved to the downside. I still believe that palladium can move lower from here, but I wouldn't be selling it here. Now, if you really want to sell it, a move to 1360 will provide a decent risk reward against this little area at 1380. Personally, I'm looking to hold my last third, because you never know, we might get lucky and get a lot more movement to the downside. So I want to be able to capture any surprise, huge move to the downside. I don't want to be in a rush to take off the last third. So I got really lucky with this, as I said, and I have no no complaints about it. So going back, I don't think that Blake mentioned it, because and it's weird, because I know that he has been on top of it since day one. We were talking yesterday about Aussie Kiwi. We were having a look at it on the daily chart. Specifically, we mentioned that there is a nice resistance zone here at 1054, and if we break above it, we should see more strength. This has already happened, but even if you have a look at it on the 4-hour chart, you can see that we are approaching now another area of resistance at 1058. It's the confluence of this horizontal support resistance area and the 78.6. Regardless, I have to say that the move to the upside looks very good. So if you have exposure, if you have a long Aussie Kiwi, if you followed Blake in this, I don't think you should abandon it. I think that any pullback down towards 105 should find buyers to begin with for another move towards 1065 to 1067. Now, having to do with the Aussie and the Kiwi, nothing has changed since yesterday. Oz is still in the middle of the triangle. Kiwi, on the other hand, is breaking down as we mentioned yesterday. So Kiwi looking much better to the downside. That's why we also have this move to the upside for Aussie Kiwi. Kiwi yen obviously doing worse than Aussie yen. I'm thinking of actually taking profits in this Kiwi yen position if it doesn't start moving to the downside soon again. Although I think it will. I'm in the money, but I've had some good trades going on lately, so I don't want to get myself in trouble. So I'm monitoring this ascending trend line support. If we break it to the downside quite soon, of course I'm going to keep this position and I hope it can take us lower towards this 74 area, which was my target anyhow. Now, on the other hand, if we keep consolidating or rebounding higher, I'll probably book my profits, which aren't anything impressive, and call it a trade. I've already had a good month with the new movement to the upside for Ethereum and Palladium, so there's no reason for me to push it. I still have also my exposure in S&P. I'm obviously out of the money quite a lot from my first entry, but I'm really not worried about it. By the way, I'm seeing pound moving to the downside. Let's see what's happening here on the 4-hour chart. Obviously, due to dollar strength after the data. One interpretation is that we broke below a triangle. You can see it here, which is a very bearish interpretation. But in order for me to get more enthusiastic about a move to the downside, I would definitely want to see the 61.8% fib roughly at 130 break to the downside. Then and only then I might start thinking that we might have a move to the downside. But I actually find no reason why I should engage in anything that has to do with the pound or the euro. Especially euro has been extremely choppy and hasn't been doing much. And as you see, I'm monitoring a lot of markets and always trying to find an appealing opportunity. And part of finding an appealing opportunity, of something being an appealing opportunity, is seeing something that you believe can move quite a lot rather fast. I don't want to have capital tied up in in something that is unwilling to to produce any movement to be worth it. Costa, Euro USD up down, yeah, more or less, but it's now at the lows of the day, as you see. So far a gravestone doji, as it's called. Of course, the daily candle is not going to stay like that. We have many hours ahead of us for this to change. SPX 500 coming next October. I'm not sure what you mean by this comment. Maybe we should all chip into St. Blake and his family on a nice long vacation to give this Brexit trade war volatility an extra nudge. Bob says, yeah, this is an old joke. It's because usually when Blake left for vacation, suddenly we had like volatility out of nowhere. So it was like he was triggering volatility in his absence. So yeah, let's see if that's going to work again. By the way, we're seeing gold pushing on the lows, which is probably going to confirm that we are on our way to the next move lower. 1280 is the place where I'm going to be taking some off, and then 1265 is the place that I'm going to be looking to take the rest of it off, unless, of course, it accelerates lower and I see, such a momentum that I might decide, not to take the rest of it off at 1265 and keep it for more. But unless something like that happens, that's my plan, and I'm only going to violate it if I believe that I can squeeze more profit out of this market. USD yen, unsurprisingly, pushing towards the highs of the day. You can see it here, and getting closer to breaking out from this area. Initially, I expected that this bounce might be corrective and produce one more move to the downside before higher. As it seems, this is not obviously the right interpretation. It's not that I have any exposure in it. I mean, it's been one tough thing to trade as well, but it's in danger of breaking higher, as it seems. At the moment, RSI is more or less telling the same story here. So, no reason to actually fight it. Not yet, at least. Now, let me see what else we have. Let me go through the questions. Facebook, Apple, Netflix, if you have any time. Absolutely. I have absolutely no problem going through some of the stocks. I've actually started making some stock lists here because, I do pay attention to some of the stocks. So let's go, over them one by one. Oh, sorry. A wrong chart. Here it is. So let's go. Let's start from Amazon. Okay, so Amazon. We had this descending channel. No idea why this is a different color. We had this descending channel. We broke above it. We came down. We retested it. This is what I drew some time ago. We also had this pennant. So both the pennant and the channel breakout were a good signal that we're moving higher from there. What I drew back then is that we might move up towards the 1870 zone. And, we're getting there. So 1870, I think, is an area of interest. We might see a market reaction from there. Facebook in an expanding triangle consolidation, very likely that this is a continuation formation. So I wouldn't be surprised if we see another push higher towards this resistance zone at 193. NVIDIA, I'm monitoring this ascending channel as a corrective, as a possible corrective channel. We're currently testing resistance, which also confluences with the 38.2% of fib of the move lower. So, NVIDIA currently at an area of interest. Tesla, there are two interpretations here. If you're bullish, you can view this as a descending wedge, in which case you're going to really like a break above this area towards 390, towards this larger range high. But I have to tell you one thing for sure. If you are bullish, you don't want to see a break below 250, because a break below 250 is going to trigger, in essence, this formation, which is a rectangle. And the implied target from such a thing would be at 110. Okay, so 250, very critical area, and Tesla really needs to hold this. We had a look on the webinar some time ago about Microsoft. I actually said, while the market was still moving lower, I said that the only stock that doesn't that its move lower looks clearly corrective despite the market plunging is Microsoft. So, if I had to be bullish, one thing I said back then, it would be Microsoft, because I saw this like expanding triangle, and, another breakout, retest, and move higher from here. As you see, we're at all-time highs at the moment. First area of interest, 127% extension at 122.22. And next area of interest for me, almost at 130, the 161.8% extension. Both of those that I mentioned are extensions of the corrective move to the downside, projecting to the upside. Okay, so Microsoft still looking good as it did back then. And Netflix, since you mentioned it, Netflix has also broken above this descending trend line. That was a bullish signal. On the other hand, this it's not a channel. It's actually a triangle because the lines are converging very slowly. This type of price action that we see to the upside isn't really appealing to me. I mean, it wouldn't be very appealing to me if I was bullish. You never know. I mean, it might be a wedge. It might be a bullish wedge, but this type of price action, for the time being, doesn't look very bullish, I have to admit. So I would be a little bit careful here with Netflix. I think that some of the other stocks are looking better than Netflix does at the moment. So I think I covered you with those. We got more requests about FXI, EM, I do have those. UVA, I don't know, which one is this? HU, YA, let me see. What is this that I'm looking at? I have no idea what am I looking at the moment, but I can tell you one thing for sure, is that this rebound higher doesn't look impulsive to me. So I would be very, very careful. It depends on your time frame, of course, right? Because in the short term, there is also a bullish interpretation if we get this. So be a little bit careful with this one. You don't want to see a break below 24. Break below 24 is going to be very bearish. Obviously, on the other hand, a break above 30 is going to be quite bullish, and it should be. In any case, either breaking below 24 or above 30, I think that we should see, a decent continuation either to the upside or to the downside. Some good follow through. Let me also check IQ for you, and then I do have analysis. IQ, it looks more or less like the other one. The other one looks technically better. I mean, more clear. This one, though, has the bullish interpretation as a more likely interpretation than the other one. Okay, one more leg to the upside. I would view this, as a little correction so far, unless it accelerates to the downside. Now, having to do with FXI, I would mention today FXI anyhow, because FXI is testing resistance once again. It's actually breaking above it, so FXI remains bullish after breaking above this descending expanding triangle. And EEM, the same type of formation as you see, it's testing this expanding triangle's resistance. A break above there should be good to extend. My pleasure, Scott. My pleasure. Can you look at ACB? Absolutely, I can look at any chart, even those that I have no idea what they are. But technical analysis. Yeah, I can tell you one thing about ACB. I won't be doing anything with it at the moment. I mean, very, very choppy price action. Why get involved with that? I mean, I would honestly do nothing with it. Nothing. I mean, there is one trend line that is of interest, probably something like this. Let me see. So to the downside, that would be it. But we're far away from it. So do what with it? Now to the upside, it's a little bit of a mystery because we had that false break higher. But you can see, spikes. You can ignore spikes and say that this, in essence, is an area of resistance. But look at this. We have like a very big area that extends between this trend line, which currently passes from 5, let's say, all the way to 12 something. I wouldn't be doing anything in between those levels. Okay. So sorry, I can't help more, but I would definitely not be doing anything else between this area and this area. But if you do see, let's say, a break above 1230, I think that that's going to be quite a bullish development, and it should produce more upside. Obviously, getting on 12, the first opportunity is going to be short against the highs, and then if we actually break through it, reverse your position to a long one. So this way you can play the possibility of another rejection from that area. But if we actually do penetrate through it, then you want to play the follow, that there's going to be some follow through, since there are going to be a lot of positions, a lot of stops above there, or a lot of people that will be trying to short, the range is high. And when they see that this didn't actually work, then they will have to close their positions, which on itself should spark some more, buying pressure. Okay. Have a look at the Bund and rates. Absolutely, Costa. Absolutely. Let's have a look at them. So let's have a look at the Bund and let's have a look at Treasuries. So bearish case scenario, a double top, but we're very, very far away from a bearish case scenario, right? Because so far this little move lower looks corrective to me. So the only way for me to, to interpret this as a double top would be for us to slip through 163.70. as long as we remain above 163.70, I have to maintain a bullish bias. Okay. Now, if we do see a break below 163.70, then we can measure this range and extend it to the downside, which would also imply a break through this larger channel again, which would definitely make things quite interesting. Okay, but as I said, the bullish case scenario remains very much alive at the moment, so we have absolutely no reason of considering other possibilities. Now, the rejection in treasuries looks stronger than the one in bonds, which in essence shows that the path of least resistance for the Euro USD remains to the downside. Okay, I would be a little bit careful between this level. As you see, we're currently testing this high, the area of this high as support. Let's see if it's going to work. But even if we break below it, then 122.5 is going to be another area of interest. Now, if we start catching a bid and we're above that, you can maintain a bullish bias. But I have to admit that if you want to be short one of the two benchmark bonds, definitely you should consider being short the treasuries. And if you want to be long one, definitely the bonds. Of course, that also implies that you might want to play the spread between them, right? You might want to be like long the bond, short the treasury. Okay, it's totally up to you. Hi Dale and team. Hi Russell. Euro USD. Yep, we already read that. Coach, do we have an interview today, by the way? Dale?
Yes, Steve.
We do.
Yeah.
Who do we have today?
We have Norm Winsky's with us.
Oh, Norm is with us. Okay.
Yeah.
Then can you please ask Norm if there is a full moon today? Because I see we had quite a lot of angry people on the chat.
Yeah. Well,
okay.
You know that
one of them was complaining about Blake yawning. Another one was, some BS like that, which I really don't understand. I mean, this is a free webinar. We provide every day. We do our best to serve people.
Well, Steve, I was thinking, what Blake was talking about with the lack of volatility, and it's been tough for people. I haven't minded it. I'm old. I don't mind low volatility anyway. But so people are frustrated, and unless you really develop, I don't care if you believe in what you believe in, but some type of spirituality, maybe, that there's more than like winning and losing in the market. You look for outlets to take things, out on other people because of your mistakes. So, you just have to ignore it, bro.
Yeah, absolutely. I mean, it was just peculiar because we had like three people.
Really worth talking about. I mean, when I had more interactive rooms where people weren't just asking questions but also providing content with their views and everything, I just had a couple of rules, and that was the most important is that you don't root for anyone else's failure to rationalize your own inadequacies. Okay, everyone absolutely roots for each other, but there are a lot of people out there that hope other people lose so they can feel okay about them losing. And also to be respectful.
Malik says there's a new moon today, not a full. Perhaps yeah.
Okay. All right. Well, you know what? Let's bring on the Wolfman. Huh?
Okay.
Oh, the Wolfman only comes out on a full moon, Norm. You're not the Wolfman.
Anyhow, I wish everybody a lovely weekend.
There you go, buddy.
We'll be back on Monday. Enjoy the interview.
Life is fragile, Steve. So
absolutely,
you got to just enjoy every day you have.
No disagreement there, Dave.
You're wasting it being toxic anyway. I know because I've spent many decades. Anyway, all right. Norm, what a great segue for you. The new moon. I know Norm always schedules his stuff on new or full moon. So Norm, I'm passing you the controls. You're from my generation, so you remember the TV show Outer Limits. So I'm giving you control of our television set.
Show my screen.
Remember outer limits? Yeah, I could hear you, Norm. How are you, buddy?
Okay. All right, and can you see my notes now?
Got your notes up there with your little bar charts and your red and green trend line on the S&P.
All right, just to confirm, this a few hours ago we had a new moon.
Okay.
I think it was roughly 5 Eastern time, somewhere in that neighborhood.
Okay, so 5 Eastern. Okay, so way before the NFP. So what type of reactions do you normally look for on new and full?
I'm going to cover that. We'll be looking for a change in trend. If the markets get to an extreme, the top of your channel, bottom of your channel, looks, a pretty good high percentage of time, look for reversals. Doesn't work all the time, but a decent, maybe 75%, 75% of the time,
Yeah.
I'll be showing you what happened on the full moon 2 weeks ago. I got it marked on the chart here.
Okay. Yeah,
so let me dive in here and we'll look at some lunar effects here in a minute. Okay. So at the top of my page here, we got the big big events that are happening in the next today and over the next week, over the weekend. So we have something called the Moon's North Node. That's lunar related. We're in the sign. It's in the sign of Cancer, which is the moon sign, and it's kind of like opposite in terms of declination of Saturn and Capricorn. Saturn that's in its own sign, and so you want to be watching the markets indicated there. You want to watch coffee, silver, and stocks. We'll be looking at those charts in a minute. And like I said, we have a new moon that's in the sign of Aries. And there aren't any futures that you can trade based on Aries, so you just have to go with the general indication for, usually a new moon, full moon. I say round up the usual suspects, which are financials, grains, and precious metals. We'll be covering those also. And then we have a sort of small to moderate indication for something going on here with the U.S., what we call a U.S. natal chart, which is we take a snapshot of where the planets were.
And the Declaration of Independence?
Exactly. July the 4th, 1776. Some of your folks may have heard of that date.
Yeah. All right. Well, that's cool. Yeah. Even nations have birthdays. A lot of people don't think that way.
Just like people do, right?
Yeah.
And guess what? It really works. All right. So Monday night, Mercury takes 88 days to go around the sun. It's not a circle. It's an elliptical orbit, So there's a point where it's at its farthest point and its nearest point. Farthest point is called Appa. That's far Helion, which is Greek. Anything helio is Greek for the sun. You see? Okay. Do you speak Greek?
Okay. Yep.
Okay. All right. Used to go to Greek town in Chicago there, right? All right.
I could eat a gyros right now, buddy.
There you go. Or the Roditis. Remember the Roditis? Oh my God, it goes down like Kool-Aid, but it's not Kool-Aid.
Oh, look, we have 2 Greek partners right here. They'll dazzle you with their menus. Okay. So anyway,
so Mercury is related to the moon is, the grains like to dance to the moon, but the other big cycle for the grains is Mercury. So that's anything Mercury time Mercury's doing something. You want to watch your grains and especially soybeans. And then here's the biggie for the first 2 weeks of the month. Jupiter, which is the biggest planet in the solar system, is going to turn retrograde. That's due to the relative motion of the Earth. It'll appear that Jupiter has stopped from Earth. It'll appear that Jupiter has stopped its forward motion and to go backwards. That's how it appears due to relative motion here on Earth. Right?
Can I ask you something about Jupiter, Norm? I believe I recall when I was looking into Jupiter that it had something to do with melancholia or depression.
That sounds like planet.
Saturn. That's Saturn. Okay, and Jupiter. What are the aspects to Jupiter?
And Jupiter is the opposite.
Oh, okay. Okay. Great times, joy, happiness. Okay.
Perhaps if you have those badly aspected in your chart, you might be a manic depressive. Right?
Yeah. Very good diagnosis. In fact, Norm, you know what? My psychiatrist diagnosed me as an agnostic, dyslexic, insomniac. You know why? I'd stay up I'd stay up all night wondering whether or not there was really a dog.
Well, there's really a dog.
Yeah, I'm dyslexic. Agnostic, insomniac.
Oh, I get it. Okay.
All right.
That's subtle. You know, that's subtle.
So the big
All right,
trade,
anyway.
we should be paying attention to the 10th then.
Anyway, yeah, it's going to happen midday, just past noon Eastern time. So it's kind of neat. It's happening during market hours. So, you know, the problem with some of these bigger events that are way out there are you can look at different sources and they all won't agree on the exact time, you know, right? Because, you know, the rounding error, you know, one formula will say round at the 12th decimal, another one will round at the 13th decimal, and you'll get maybe an hour or two difference, you know. So here we go. Here's the S&P. There's your full moon that occurred on the that was on the the night of the 20th, right? There's the top market top right on the 21st. There we go. You had a nice correction there in the S&P. I think you dropped 50, 60 handles there, which for the folks, if you're not trading S&P, every handle is a whole number. That's $50.
It was on the equinox too. Equinox, full moon. Let me ask you about confluence. When you have, you know, more than one astronomical event happening within a cluster around the same area, is that a more powerful signal?
Oh, absolutely, absolutely.
Okay.
Yep. So anyway, there you go. So you want to watch the moon for the stock market, and then we've rallied up. Now this shows you where we're at now. We're near the top of this channel. And it's a new moon now, so I'm expecting a good possibility for some sort of maybe a pullback here for a day or two. Then we're going to be at an extreme again when Jupiter turns retrograde. According to my theory, we should be, because that's what I call planetary polarity point. When the markets tend to get polarized, they go to one extreme or the other, and then you get a big change in trend point, you know.
Okay.
Here's your bonds. The bonds were off a day or two. They bottomed. They tend to do the opposite of the stock market, and they made their low on the 19th when we had the full moon the night of the 20th. So I gave that a red arrow because call that a miss because it was off by more than a day. Here, but all your folks out there are going to get very excited now, Dale, because here's the dollar index, and look what's going on there. Bing, bang, bang. That's almost perfect. It bottomed on the 20th. You could have still got in the next morning on the 21st near the bottom, and look at that nice up move, huh?
Yep, on the
currencies as you'll see here, the currencies dance to the moon. Here's the euro. It did, of course, what we'd expect. Is the mirror image opposite. It made a top there, almost a perfect mirror image of the dollar index, right?
Did you have anything near the lows this week?
But what do you mean? Well, there's the euro is kind of scraping along there. Most of these markets, especially the currencies, and you folks were just talking about this, the low volatility. Well, look what the markets are doing here the past few days. They're all kind of trading into a wedgie, you know.
Okay.
Very narrow, and when you get to a change in trend window and you're at the wedgie apex, you're probably gonna. It's almost, you know. What's the word I'm looking for? It's inevitable. That's it. It's inevitable. It's got to break out one way or the other, right?
Yeah, it's compressed.
Yeah.
I like the upside.
Look at that. The pound is doing roughly the same thing. It's not quite as far along on the wedge there as some of the others, but it's still doing the wedgie, right?
Right.
Yeah. There you go. Here's the Aussie dollar. The pound. It made a low right there on the 21st. There's the Aussie dollar. It made a top on the 21st.
Any upcoming dates in the currencies? I know we see the low here. You have any
right now? We got the new moon right now.
Okay.
Yeah.
All right. So the dollar tried to rally into it today, and it's giving some of it back. So maybe a failing rally in the dollar at today's high.
I'm pretty sure that by the end of the day, you should see, you know, which way these currencies are going to go, you know, right?
Okay, buddy.
Yeah, there's your pound, there's your Aussie dollar. We did that. Here's silver. I mentioned precious metals. Silver made a top there right on the 21st. See, here's the commodities. Here's the commodity now. It's also in a narrow range. You see that?
Mm-hmm.
Here's gold. Gold was off a little bit because it did make a little bit of a one-day top there on the 21st, but then a couple of days later went slightly higher, and so possibly you could have got stopped out there. So I had to give that the red arrow miss, you know.
Okay.
Here's corn was off of a couple of days. It only went a penny or two higher, kind of like the gold, you know. And then it went, and it had a big down. I had a big Mercury thing happening. Mercury turned direct right there on the 28th. Yeah, and then that's the 28th at the top of the right before it went off the cliff, and then over the 29th weekend we had Mercury get to 0 latitude. That's also a big Mercury deal, you know. So that's you look at how the corn bottom right on 0 Mercury 0 latitude.
All the grains, huh?
Yeah, and then here's your beans topped on the full moon, and they also bottomed at the Mercury 0 latitude. Wheat was didn't cooperate. It topped a couple of days later. Okay, so it doesn't work every time. All right, I mentioned coffee. We got to take a look at coffee. Coffee's at a big fork on the road here. It's it's sticking at one toe over the line here. Is it going to break out to the upside? This coffee's been going down for months now. You know, just kind of an erosion market, and just keeps going down, down, down. Now it looks like it might poke out over the channel here and it possibly break out. If it rolls over and it goes back down here, it's probably headed back to the bottom of the channel again, you know.
Okay.
Here I mentioned crude oil, and there you can see crude oil is...
you have no arrows.
What's that?
No arrows.
Yeah, because I don't do the moon for the crude oil.
Okay, what do you use for the crude?
Crude is Neptune.
Okay.
Or Pisces. Well, here I'll show you a neat thing that happened. Now, you remember I mentioned that Mercury turned direct the morning of the 28th in Pisces. See?
Okay.
Look at, you see something there? The 28th.
Yeah. Nice reversal. Yeah.
Right. Now, why is that? Why would that be connected to oil? Well, Pisces is the fish. Where do the fish swim? The fish swim in the big liquid, right?
Yeah. Okay.
And in the
so
commodity
it's like
world,
a water sign.
Oil. What's that?
It's a water sign.
Exactly. This is a big liquid, right?
Yeah.
That's it. And that nailed it. You see that?
Uh-huh.
Okay. Usually Mercury probably wouldn't be anything for oil, but it turned in Pisces. Okay? Got the fish all stirred up, you know.
Well, they do pull a lot of oil out of the ocean.
Oh, that's true. All right, moving on ahead. We have anything more? That's the end of my charts. Anybody have any questions?
Any questions for Norm? Russell like it. Could you ask to confirm that new moon equals bullish bias, full moon equals bearish bias? And I'm assuming they're talking about maybe the S&Ps or everything. Luis?
I think it's smarter just to wait and see where the market is and then look for a change in trend at that point.
Okay.
I think that's a smarter strategy. I mean, yeah, I could tell you, the historical tendency is that I think commodities tend to bottom on full moons and top on new moons. But then if you get bias like that and if it inverts, then you might lose money.
Okay, you're welcome, Luis. So, you know, a lot of these questions and, you know, what you're getting from Norm is just, you know, kind of a real quick review of what he teaches. And if you have an interest in this, you know, it's becoming, you know, less and less of a popular art form in the market and methodology in the market. And Norm's one of the masters. So if you really want to learn how to do this, Norm, tell them about your classes.
Okay, well, I'm running a special this month. I'm teaching people to day trade the S&P. It's a 20-minute class. It's all free. I do it on Skype. You have to have a futures account and enough money to trade the S&P. And it's been very successful. The system, my trading system, been average. I don't know if I can say this or not, but it's been averaging about $400 a day trading one S&P E-mini. So that's
pretty good. That's 8 handles you're pulling out.
Yeah, that's a living, you know, right? That's a pretty nice living.
Okay, and you know that's interesting because we've been complaining about low volatility in FX, but there's been very good, or at least quite enough in S&Ps to scalp. You
yeah,
know, you have
right
nice
now,
ranges. Yeah.
right now the S&P is in relatively low volatility. You know,
Yeah,
we
the
measure that
VIX.
with the VIX, and it's in
Right.
about 13 now. Back a couple months ago, back at the end of last year,
Yeah.
when we had the high
Oh, yeah.
volatility, my system, although the batting average would go down a little bit during the high volatility, the profit margins would double and triple. So maybe
Yeah.
on an average trade, maybe rather than making 3 or 4 handles, I'm making 10 or 12. You know, right? It's
Right.
yeah. So
Cool.
you know, it's
All right. So this is a new offer for you, Norm. So how they get a hold of you?
there we go. Here's my contact information at the bottom there. I'm in sunny Florida. You can call me at 239-594-3939. There's my email, Nowinski at embark with a Q in the middle, mail.com. Or here's, I think, my Skype. You know, I don't know if you had trouble with Skype last year or not. They had that whole big changeover in Skype and messed up my Skype, and I had to go hire my computer guy to untangle it all. And what I just discovered a couple of days ago, Dale, is I think my Skype handle changed and nobody told me. So for almost a year, I've been giving out my old Skype handle, and everybody go, I tried to call you and you didn't answer.
Yeah, I know. Yeah, don't you just love the New World Order? Anyway, Norm, if I don't talk to you, have a happy Passover.
Thank
And
you.
thanks so much for stopping in. And God, I wish you a lot of success and hope a lot of people, want to learn what you have to share. I mean, your knowledge base in this.
It's only a 20-minute class. I'm going to give you a free trial to my timing letter. It gives you intraday times during the day when the market's likely to turn, and it works quite well.
Okay, Norm.
We seldom have a losing day.
Okay. All right. Well, continued success. May S&P handles rain down on you during the spring trading season. All right, partner.
All right, well, thank you. You too, Dale.
All right. Well, that's my trading warrior brother, Norm Winsky. And take a screenshot if you want to get in touch with Norm. He's one of the best in planetary stuff that I know. I know quite a few. So, everyone, that's a wrap for Face this week. Thank you for celebrating our 2-year anniversary with us. Remember that just count your pips, count your blessings. And we'll see everyone Monday. Have a great weekend. Adios. And do your work over the weekend and be ready to trade. I'm looking at the yen. I still think that the yen might be a short. I'm wrong over 12.10, and that the dollar still could fade and trade 96 again. Adios, everyone. See you, Russell. You're welcome. Thank you, Norm.
Thank you very much for having me on. Have a great weekend.
You too, buddy. All right, everyone. Adios.